Welcome to your Mortgage Insider Update. It is December the 1st, Cyber Monday. If you didn't get enough on Black Friday, today's the day to save a little more money on your Christmas shopping. And the stock market is down. Interest rates are up. What is happening? We are 1 week out from the Federal Reserve meeting, and the chips are being moved around the board as everybody's positioning for the what if the Federal Reserve were to cut rates again. Would they hold off for another couple of months, or are they not going to cut rates and wait till the next Fed chairman is announced right before Christmas? We shall see. There will not be a lot of input or data this week. We will not get the jobs report from November until after the Federal Reserve meeting. So there's a little bit of a vacuum on information. So every little move in the stock market could sway interest rate markets, and every little bit of news about retail sales, which has been pretty strong. So the stock market being down is a little surprising today, but let's take a look and see where we stand. We see a pretty substantial move higher on the 10-year Treasury, up at just under 4.10, up 8 basis points. We dipped down close to 4% just this last week. So a move higher, substantial move higher, not really a great sign. Conventional mortgage-backed securities price is moving up, while that represents the interest rate to the consumer. The mortgage-backed security price is lower, 19 basis points. That also represents the investors' pullback. They're not willing to buy those mortgage-backed securities, which we can see in the 10-year Treasury represents higher interest rates. So we'll focus on the 10-year Treasury note rate for now as a barometer to the mortgage market. Now, no major news other than just holiday news. Like I said, retail sales was reported pretty high for the Thanksgiving holiday and the Black Friday week last week. So a dip right before the end of November. Sometimes this happens at the end of a month. We had maybe a hedge going on in buying up bonds, which drove the interest rates down because we did have a long delay before the end of the month of November. Now we're seeing December 1st cycling back higher. So we basically took a step back to November 21st. So just erased the last week of gains in interest rates. So we'll keep an eye on this every week. We'll get another update here on YouTube next week. So subscribe to this channel if you want to get weekly updates, or we'll give you another follow-up in the newsletter after the Federal Reserve meeting with a little of the results and the movement in the market after the Fed decision on December the 10th. Take care.